Good afternoon, everyone. It's Dr. K here in London, and it's Gil Morales over in Playa del Rey. And it's nice to see a rainbow outside. You've got some rain over here, but interspersed with lots of blue sky. So it's an interesting spring, and I trust that Playa's doing well, being in sunny LA.
Oh, definitely.
Can't say the same for the markets, which keep throwing up these conundrums because they're manipulated by QE, and the NASDAQ was a breath away from hitting new multi-year highs yesterday, and today, and that was on also after this whole year has been quite lackluster on the NASDAQ Composite. So the averages tested some of their moving averages. The NASDAQ undercut its 50, then it's been bouncing. It's been bouncing on stronger volume, so that's all good. And having formed this V pattern over the last 2 weeks, it's normal for it to have perhaps a retracement of some sort. What's the volume today, anyways? I think we're probably running lower than yesterday, since yesterday.
Now we are running lower, so the pullback's coming on lighter volume. But yeah, and given this really severe V shape, I mean, these last two Vs were pretty hectic, Dr. K. Now you got this one. The market's outdone itself in terms of V-shaped rebounds, and this one really takes the cake so far, at least in 2013.
Yeah, indeed. So this is normal action. The QE effect is alive and well, and it's interesting because leading stocks and price volume action in leading stocks and major indices continue to indicate that the market should have fallen off a cliff way back, weeks ago. And we saw that action, for instance, at the end of February, where I think virtually all the models went to a sell signal, including IBD, and then the market found its footing as usual, and then it went higher. And then the same thing has happened. Well, it hasn't happened yet, but with IBD, they would be forced to go into a buy signal, I believe, once the NASDAQ closes at a new high. And that could certainly happen sometime next week, assuming this very lackluster uptrend in the NASDAQ continues. The S&P, on the other hand, has a more of an uptrend in keeping with prior uptrends. Maybe it's a hair softer than, say, the uptrend that we saw in late 2010 and early 2011. That slope in the S&P was just a hair steeper than what we're seeing today. But nevertheless, the S&P is the index that is outperforming the NASDAQ. As you can see, if you look at the relative strength on an ETF like the SPY, which mirrors the S&P 500, that relative strength is 61. Where if you go to the triple Qs, which mirrors the NASDAQ 100, that's 49. So appreciably more strength in the S&P. And just curiously, if we go to IWM, which mirrors the Russell 2000, that relative strength is 64. However, you'll notice that it's further away from new highs. It tends to be a lot more volatile in index because of the small cap nature. So when risk is on, when investors are willing to take risk in the market, this is the index to be in. So far this year, there's not enough convincing data that shows that that risk is on. So we prefer to opt for the more conservative and outperforming SPY, where S&P 500 related ETFs, and shy away from the NASDAQ, since there's no telling. The Apple's in a firm downtrend. It's only about 6% of the NASDAQ 100 now, but nevertheless, techs have been weak, and this downtrend, it's in a firm downtrend. So I'm not going to argue with that downtrend, and I'm also not going to argue with the weakness exhibited by the NASDAQ Composite or the NASDAQ 100. So in the meantime, the S&P seems more of a safer bet with potentially higher reward. And for now, I'd avoid the Russell 2000, just simply because the markets are not really in concerted, firm footing in terms of a nice uptrend that we'd like to see when we get a buy signal on the model. So caution is the watchword, and position size accordingly. If you're going to get into any of these wilder ETFs like the 3X ones, always know what your downside potentially is going to be in those names. Gil?
Yeah, I don't have a lot to add on the market. I think you're just in this really choppy zone here, as we can see on the NASDAQ. And I think this just makes it difficult to make any progress in individual stocks. The action is really uneven, and you essentially, to make any big money, you have to be playing earnings roulette on the right day in the right stock. And, of course, if you're not in the right stock and you're playing earnings roulette, things may not turn out as well for you as you might like. As a couple of these names after earnings. Edwards, I know we were talking about this as a potential short last week, I believe, and I don't know if you would short it into earnings. Seems very risky to me, but if you had, you get this big gap down. But that seems to be how you can. That really seems to be the only way you can make any consistent big money, and that's just gambling, really, when you're playing earnings roulette. And that seems to me to be what this market's all about. We've got stocks like Netflix. Here's a viable gap up. You have volume drawing up, and it's holding the low. So far that's acting constructively. So we'll see if it's getting ready to move higher. Lumber Liquidators was the other viable gap up. That's continued to trek a little bit higher. Volume's declining, so it may be in a position to pull back and take a break. Illumino was another one that had a viable gap up, and it's hanging out and just really going nowhere right now. But still a valid viable gap up using the low of the intraday low of the viable gap up day 4 days ago as a downside stop. So it's a little bit of this, a little bit of that, and it might be a whole lot of nothing. So it's really tough to make progress. And if you're going to take any positions, we'll be willing to take 2 or 3 or 4 small positions and see if something works out. It seems like if you have patience and you're picking the right names, you can make some upside progress. The question is whether the market just tests your patience a little bit too long before you decide to just bag it. So, most people, I think, I can tell from the members lounge, the new chat room that we have available, and anybody who's a member can go on there. I show up there frequently. Dr. K, you're kind of a snob. You don't come and visit us in the lounge. What's up with that? Do I need to start serving martinis in there to get you in there? What's the deal?
Yeah, some virtual martinis, huh? Dirty ones with the double olives.
Dirty ones with double olives. Right on.
Yeah, that's. I find that the e-marketing engine, it's very diffuse. So questions come at me or comments, remarks from all these different sites, and it ends up being sometimes a bigger part of my day than I want. So the last thing I want to do is actually become more involved in that, because it's already kind of at my limit. But I enjoy the interaction that I have with people from whether it's YouTube or Facebook. One of our pages on Facebook, I think we've got now 3 on there, and it's all good. I always encourage people to ask questions, but basically I think putting yourself into a chat room can sometimes eat up a lot of time before you know it, because then you've got lots of questions all at once, and I'd rather have people email the questions over, because then I can answer them in my own time.
All right. Well, since we're just not good enough for you, Dr. K, I guess people can just email questions in to Dr. K if you have any regarding the model, because I know when I go in the chat room, I'll get a lot of questions about the model, but that is not really my bailiwick. So
yeah, no, it's just email them over. Don't be shy if you have a. But also go to the FAQ and type in keywords, because a lot of the questions we get, I find that you can just do that. You type in your essential keywords and the questions answered. And I think most people are doing that these days, because the number of questions we get that where I could just literally go to the FAQ, click on the link, and send it to them are quite few these days. So I think people are doing their homework before they're emailing us with questions. And that's all to say that the questions we get generally are pretty good.
Someone's asking whether you can get on the chat room via an iPad. We actually have our programmer working on that, I believe, right now, and we should be able to. We do have an app for the system that we use, which is called ParaChat, which can be used on the iPad. Anyways, just continuing along, just to kind of illustrate what's so nutty about this market is, I'm looking at the builders today. They're one of the strongest groups over the past few days on this bounce. And look at this sort of nutty action. I mean, this is just straight up, 20% move straight up off the lows when it's looking like death down here, and like this thing's ready to just head straight for the 200-day moving average. and they just turned this thing around and zoom. You got a gap up today. You also saw another one in DHI today. Look at that. Is that a viable gap up, Dr. K?
You know, this group is so schizophrenic.
Yeah, definitely.
Hesitant. If you look at the industry group strength, you know, at one time they were very strong, you know, many weeks ago, and then they became weak down to a ranking of 76, and then 2 weeks later they were up to 29, and then 3 weeks later they were down to 157. So, you know, the group is manipulated by lots of cross currents going on in the economy, and so I think that adds a lot of additional risk on top of, you know, just the normal price volume action and the fundamentals of these companies that you see on the surface. Therefore, the chart's telling us what we need to know. This thing tends to violate its 50-day. Therefore, I wouldn't get involved in this name or any names that aren't clean patterns, knowing that there's a lot of cross currents out there within this group. And so DHI, I mean, yeah, it came in with good earnings, but these stocks tend to the patterns tend to correlate to some extent. So in other words, if the whole group gets hit, like it has before, I don't think the viable gap up in DHI is safe. I think it'll undercut it and it'll hit your stop. So I'd be less likely to recommend or suggest putting money into this name.
Yeah, I think even at this stage, you really had to buy this. This is what I would call an ugly duckling trade. Something in this market, and it seems like a lot of times this is when you buy things, is when they're looking about as ugly as they can possibly look, and they magically just turn right around and take off again. But, you know, are we out of the woods in the housing market? Are we on the verge of a new housing boom that's going to take us back to the bubble days of 2007, 2008? That's debatable, but I think that, you know, the bottom line here is trying to play these stocks, unless you're extremely patient and you have a long-term view and you have conviction in that long-term view. It's very tough to stay in these stocks to really make any money, and trying to buy off the lows is also difficult because you're buying in midair here if you were able to come into it. Somebody asks, in today's MLO report, you mentioned both Workday and Splunk, that a number of strong institutions have been building in the stocks. Is this data from Wanda, and what data points are you tracking? Well, you can look at data on Bloomberg, you can look at data on Yahoo Finance, and you can look at O'Neill's data as well and kind of corroborate them all. But that's what you're seeing. You're seeing some of the Fidelity funds have been moving into Splunk for a long time, and they moved into LinkedIn for a long time. Doesn't mean the stock's going to launch right away, but what it tells you is that there's some strong institutional support building in the stock, which is generally a positive. And if we believe, based on our experience on the institutional side at O'Neill, that some of these institutions coming into the stock are above average and tend to be pretty smart, and we also know their patterns of buying, where if they start a position, say 3 months ago or 2 or 3 quarters ago, then that's telling you they're likely to continue buying the stock, and that's what we like to see. You like to see them coming into the stock as a new position or within the last couple of quarters, because they will tend to continue building their positions, and they'll support the stocks when they come down. And you've seen that with Splunk, and the stock has continued to move higher. Had a pocket pivot yesterday. It's just backs and fills, and you know, it looks like it's acting okay. Coming into earnings, you know, if you own a 10% position, I really think there's a huge amount of risk there. And most of these stocks, if they're acting well going into earnings, tend to do well once earnings come out. I mean, that's not a 100% certainty there, but, you know, probably they'll do well going into earnings and probably have a good reaction. Workday is a little more erratic. I think if you're buying the stock, the closer to the 50-day you can buy it, the better. The big pocket pivot, I think the key here is that you know institutions are coming into the stock because they took advantage of a 63 million share IPO lockup expiration to take stock, and that's what they did. You know, sellers came in and they took stock, but it didn't look like it was all that easy for them to take because they ended up driving the price higher after an initial breakdown on the opening. You know, if this stock is going anywhere, it's just getting going. If you look at a weekly chart, you've got good support along the lows of the base. My feeling is if it can hold the 50-day reasonably well in these lows, which you notice you're getting higher lows in here. I think the stock has potential to go higher, and everybody knows that their earnings are negative, and so to me that's not really a factor in this market. Fundamentals and huge earnings growth necessarily have not been a guarantee or a guarantor of higher prices, and in many cases we've seen some interesting situations continue higher. For some of you who've been in the chat room, you know, last week I was jokingly referring to what I call the subsidy stocks, and we joked that Can Slim, the S in Can Slim, has changed from sponsorship or supply to, I think it's supply now, right, Dr. K, to
it used to be supply.
Subsidy. You know, so if a stock is potentially beneficiary of subsidies like Tesla, it can go higher. And we were discussing this one in here last week when the chat room first started coming up, and it's gone higher. Solar City, another one. You know, we have these guys coming to the door at my house or my neighborhood, and they're offering to throw up a solar panel system on your roof to provide you with electricity. And it's interesting because their pitch is that it's not going to cost you a dime. You just need to sign up for it, and with the subsidies, it basically doesn't cost you anything. The only problem is if you haven't put a new roof on your house recently, they put this thing on top of it, and something happens where you need to replace your roof or put a new roof on. A little bit of cost there, removing the system and then putting it back on. So, you know, it's not necessarily entirely a free lunch, but since we use very little electricity here in Playa del Rey, where the weather is usually so perfect that we don't need air conditioning or not much heating in the wintertime, to me it doesn't seem like it's worth the cost. But you can see the stock with negative earnings growth, I believe. Let's take a look at this. I think it's pretty pukey. Yeah, in fact,
well,
was
yeah,
-3
until next quarter. Supposed to go positive. So it's one of those companies that have been in research stage, and then they're going positive. And in the late 90s, there's some tech companies that did that, and they'd go ballistic. I think there's a lot of, you know, the sales on this thing also have shot up quite a bit. Yeah, 678%, and then they're going. Looks like they're going to continue pretty strong. So, looks like there's something going on in terms of you know, whatever they're doing to maybe they got some major contracts ahead, and that probably caused the sales to jump like this.
On Solar City, Dr. K, is that what you're referring to?
No, actually, I was still I was actually still looking at Tesla when you were talking. Solar City is another one of these companies. I mean, that's going to be, it's in a research stage for quite a bit longer. But I just wanted to make that comment on Tesla, that the sales have just jumped. They've quintupled from the most recent quarter, and it looks like they're going to stay at that level. So it looks like they've got a pretty significant contract going on.
Yeah, I was talking to our friend Mark McKechnie. He's an analyst. I forget the name of his firm, but he's a tech analyst. You'll see him on CNBC from time to time talking about mostly the cell phone makers like BlackBerry, or I guess it is BlackBerry now, the old RIM, Apple, Samsung, and so on. That's his expertise. But I was talking to him the other day. He called me and wanted to talk about some stocks, and he mentioned that in the Bay Area where he is located, the Teslas you see on the road, they're all over the place. And all the money in Silicon Valley, which has been benefiting from IPOs and, say, LinkedIn and Facebook and whatnot. And Silicon Valley has money because that's really where the cutting edge of the economy always is these days, in any case. So there's a lot of money there. I know the Woodside area, which is just, say, northwest of Stanford, where I went to school, and southeast of Berkeley, where Dr. K went to school, is said to be the most wealthy area in the country in terms of the number of entrepreneurs who have cashed in on stock and, you know, have millions and millions of dollars, billions at times, and so they can afford these luxury cars like a Tesla, and they seem to be doing well. But of course, the stock is way extended now. But you know, one of the four stocks we were talking about, First Solar, I was talking about last week. It was in this flag. There was an interesting article on IBD overnight that is in today's paper, but overnight because it does show up the night before, talking about the situation that their business really is declining, and they don't have the competitive advantage they used to have. But in the short term, they're realizing some pretty strong cash flows from the business they do have, and the idea is to use the cash flow to invest in regaining their advantage. And we'll see whether that happens. I don't see First Solar as a long-term hold, but it was an interesting trade if you bought in and around the flag, but one that we were talking about on the chat room. So there's a lot of smart people from what I can gather in the chat room, and I think the point is not for Dr. K and I to be there. The point is for a lot of you to be able to come together yourselves and exchange ideas. So essentially trying to bring the VOSI community together in a chat room lounge, or as we call it, the members lounge, for all you lounge lizards. So now we have the lounge lizards to add to the webinoids as people who like to dwell in various regions of VOSI. Anyways, the other one that I saw sort of as a subsidy stock, I know that if you go to Home Depot, you can't find their lights, and these LED lights are very difficult to get a hold of these days. So they're selling out, and that's probably the long-term trend, is towards this sort of lighting. You can see you're pulling back on a this wasn't a pocket pivot. It's the line is blue because the way I have these coded, this thing gapped down at the opening on earnings and is way down here and fought its way back on a big volume spike. So technically that is not a pocket pivot, correct, Dr. K? I would have to finish up on the day. Is that right?
Yes.
Yeah, so but you get some pocket pivot support, and it's trying to hold on top of this little area, so it's pulling back. Maybe buyable in here. If you're patient, it'll come out and move higher. So pulling back today, I don't think volume on this is very high. It's running a little bit below average right now. But I think this may have some potential if you're willing to hold it and be patient, and also if it is able to hold above the top of this little consolidation area, little kind of cup and handle type thing. Not really a cup and handle, a thimble and handle, I guess you might call it, but pretty minimal. Somebody asked a very good question, I think. Do you think this kind of nutty action, or does this kind of nutty action remind you of a climactic top? Well, a climactic top reminds me of a climactic top, and I don't know if you could say this is climactic type of action. It's nutty action, no doubt about it. And as I was pointing out earlier, the market recently over the last 2 weeks has outdone itself in terms of V-shaped recoveries. I thought these were kind of nutty, but the reality is they were kind of just shakeout-like, and this one is even deeper than any of them. But on the NASDAQ, you undercut this low, so it sets up a logical point for a rally. Now the question is whether you're going to consolidate and do a little pulling, backing and filling, and head higher from here, and that remains to be seen. The one thing that bothers me is just the uneven action in leadership. And being in the chat room, I can tell that most people are having a tough time, and most people have had the experience of buying certain names, watching them go up a little bit, and then watching them roll over for the most part. And I think some people have managed to be up so far this year. It's very tough, and I think you could easily be up 15 or 20% if you're in the right stocks, just as easily as you could be down 15 or 20%. So I think you're kind of in a strange environment where you really have to be in the right stock, and a lot of times that can just be the luck of the draw. So other questions that are coming in. You guys are kind of quiet this morning, I noticed. Not many questions coming in, and now they seem to be coming in force here, so that's good. I was afraid maybe you guys were all sleeping out there. Maybe you have low testosterone, so that seems to be the diagnosis of the month, judging from the commercials. I'm wondering, Dr. K, what happened to all those prostate commercials where you had to take these drugs, guys driving around in golf courts and having to jump off at the bathroom every 2 minutes, and they were advertising for these drugs, and suddenly those have disappeared, but they've been replaced now by testosterone ads, and I don't know, I'm just throwing that out there because that's just something I've noticed, and everybody seems to be worried about testosterone impacting their, quote, performance. But, I don't know. When you get to be 60, 70 years old, is performance really all that meaningful? Unless, of course, you're Bill Clinton. Anyways, let's see. Somebody asked a question. The media keeps talking about a sector rotation. Can you comment on sectors of interest for Q2, Q3? I don't have any sectors of interest. I'm not a bottom or a top-down sort of investor. We're more bottom-up. Wouldn't you say so, Dr. K? We don't look around and say, oh, here's here's a sector that we're constructive on for Q2, Q3. Who the hell knows? You know, you watch
Right.
the stocks, and if you see a group of stocks acting well, then you know that sector is the one you want to be buying into. You don't have this preconceived idea that a sector might be of interest in the next quarter or two. I mean, that's just not the way we operate, and I don't think you ever really want to operate that way. I know somebody was asking me, emailed a question in, you know, that this guy Yardeni is saying that information technology is the place to be, and can I recommend an ETF to play information technology? But, you know, I don't know. I look at some of these stocks. There's some information technology for you right there. Here's another information technology one for you right here. Here's another information technology stock for you right here. Here's another one. You know, I don't understand what makes these attractive, and you know, he's trying to make a call on a sector maybe that it's bottoming, but that is so antithetical to our way of looking at the market that it's really not something that we engage in. Could you explain the reason why LL and RMH were not reported as BGUs? Can you explain that, Dr. K?
Well, you know, like I was saying, with this home building group, they're very, very choppy action. A lot of these names are violating the 50-day. If you look at LL, it violated the 50-day in late February. It also violated it in December, and a number of the other names tend to violate the 50-day even more frequently. So I'm just it's just the same reason why this DHI today is. I don't consider that a viable gap up. I think there's a little bit too much risk in this group because you can just look at the price performance, and the group ranking is all over the map. If you go back, you know, over the last you know, several weeks, or go back 15 weeks, and you'll just see the group ranking just fluctuates all over the place. So I'd rather avoid this group for now until maybe it'll get more constructive overall, and then issue some buy points. But right now, it just seems a bit random.
Yeah, and I can, on this ARM Holdings, to me, this one's coming off the bottom of a base, and so it doesn't look as constructive as you might want it to. It's coming up through the 50-day, and after declining, it's a little bit of a squirrely stock. You can see that it doesn't trade all that continuously in our markets because it is isn't it a UK stock, Dr. Kane, in your neck of the woods over there? But so, you know.
It's the Netherlands, I think. Yeah. Actually, no. It's listed in UK. There's another one that's Netherlands, but yeah, it's British designer of microprocessors.
NXPI was the one that was in the Netherlands, so there's an IT stock for you.
Yeah.
Boom. You know, and the group is a little bit uneven. I've seen some other stocks like this. Semtech had a Bible gap up here, started to run up and then blew up. If you look at Intel, it's doing okay, but on the other hand, Qualcomm has gotten tagged. Now here you have this, you know, it's drifting back up and has gapped down, you know, after drifting back up, and this is looking pretty ugly. So I would say overall, it's an uneven group, the semiconductors, and so that was, you know, basically why, and the position we don't like. But, you know, we're all about teaching people methods that they can employ themselves, because we really think as an investor you're pretty lame if you need somebody else to tell you what to do, or you need somebody else to instill confidence in your decision making by, you know, blessing what you want to do. And, you know, we get questions all the time. What are your thoughts on this? Do you think I should do this? Do you think I should short Alexion, you know, as it's going through the 200-day moving average here, you know? And we're about teaching people to deal on their own. And yeah, we put out alerts because we're trying to distinguish between what we think are the better viable gap ups and the better pocket pivots. It doesn't mean that we're going to be 100% correct all the time, and so we do try to exercise some judgment with respect to these. And so, you know, I would say that if you know something about a stock and you have more confidence in making a decision to buy a viable gap up, say in the case of this stock, so this ARM Holdings, then the trade is very simple because we have outlined specific rules for handling a trade. I mean, any viable gap up you can look at as being viable when it shows that kind of a movement. I don't think you had did we have the kind of volume you're looking for on that one? It doesn't look like it on the E-signal chart, but let's see. Yeah, the volume rate was pretty good that day. So, but you know, if you think something is viable, then you buy it, and then you use that as your stop. So, if we don't like it, maybe that means it has a lesser probability of working. But you can always, if you know something and you've done your homework, maybe more so than we have on a particular stock, then why can't you take a shot if you want to? This idea that somehow we're the high priests of investing and you need us to bless your stock, it's not really what we're about, and we really don't ever want to go there. I mean, our view is that you shouldn't depend on so-called gurus, because we're not really gurus. We're just students of the market and essentially trying to lead a discussion about the market and give our input based on our experience and our methods. But there are a lot of you out there who are pretty smart people, as far as I can tell, at least judging from the chat room conversations. And I think you should be capable of making your decisions. And those of you who are new, that's really where you want to get. And you have to have the courage to make your own decisions and believe in yourself as an investor, because if you don't, you will not survive. I don't care how many gurus' websites you go to and sign up for, okay? And that's really what we're all about, is trying to empower you guys to make those decisions for yourselves and understanding how to control risks. If you have an educational question, we're always happy to have that. But, you know, blessing stocks, I don't ever want to get in the business of blessing stocks. So, in any case, let's just move down through some of the questions. Always a lot of good questions. Dr. K or Gil? Let's flip the coin. Which one do you want to answer this, Dr. K? Can you do technical chart analysis on an ETF like TZA, or is the volume not valid because of the unlimited creation of volume units? I like that term, volume units. Dr. K, you want to elaborate on that, since ETFs are your area of alleged expertise?
Yeah, I would try to stick to the basic, IWM equivalent. TNA is the 3x, IWM is the 1x, TZA is the 3x inverse. And I would not, I don't like the idea of using the volume, price volume signatures within, these types of ETFs. Generally, I ultimately prefer going back to the original index. So in this case, that would be the Russell 2000, and looking at the price volume action on the original index and then making my decisions.
Right. So you translate the price volume action on the index itself to the ETF, making the ETF's price or volume action irrelevant. So anyway, somebody says you sound terrible. You're breaking up. I just want to say, Dr. K, have you noticed that I'm breaking up when I speak? Because I don't notice that you are.
You're all good.
So usually what that means is that if you're experiencing that, is that you're too cheap to get real internet service. So I hate to say it, but that's probably the case. And in this day and age, you need to be in an area where the service is very strong and pretty decent. And so that's usually an internet problem. It could be your internet service, it could be your router, it could be any number of issues on there. So,
Well, it could also, yeah, I mean, there's still, most of the build-out has occurred, but there still are some places that there's not enough of a build-out and the speed is limited.
Yeah, I like some of these comments.
Dr. K, it's difficult.
Is Dr. K going to be Leisure Suit Larry in the lounge? I don't think so. Somebody says here, I always wear my...
Your job.
I always wear my... I used to have leisure suits back when I was a teenager. I thought they were cool, but that was in the 70s when leisure suits were cool. Now you're a dork if you wear a leisure suit. Anyways, I always wear my members-only jacket I got in 1981 when I'm in the members lounge. It makes me feel more exclusive. I like that. What we need is more like a montage of video images of everybody who comes into the members lounge. So, but as soon as we figured out how to add virtual martinis, we'll let you all know. So let's go through some more stocks here. Ulta has a short, filling the gap. I guess if you really think it's a short, did these guys come out with earnings yet? They came out, well, they came out again in June apparently. They came out last time and gapped down huge. That's what this is all about. The company has declared a buyback, and it seems like it has had some influence. But, this just shows you how you think a stock's going to blow apart, and it just keeps trekking higher. I don't really care much for this one as a short myself because you got a B+ accumulation rating now. It's sort of improving, and it's confounded the short so far. So if it was really weak after this gap down, it would have continued lower. That's just my thought. If you really want to short it, then I guess you better short it here and figure out where your stop is and keep it tight. That's all I would have to say. Somebody says, Dr. K, I'm really liking using the 13-day exponential moving average instead of the 10-day simple moving average with the 7-week rule. It's a little more forgiving on pullbacks, but that can also skew whether the stock triggers use of the 50-day. any thoughts? Have you experimented with other moving averages?
Yeah, I've looked at other moving averages, and you can always create rules around different moving averages as long as the rules are sound. So there's people who do use different length moving averages. It might fit their trading style also a little bit better. Some people have shorter term, some people have longer term horizons in terms of how long they want to hold the stock. And I've just found that the 10-day has always worked for me. I've been using the 10-day for ages, since really the early 90s. And that was when it was considered, no one was using it then, but it worked, and it still holds up around the rules I've created. That said, some people like using the 20-day instead, creating rules around that. And O'Neill likes, I don't really think he likes the 10-day at all. He never, it's a too short time frame for him. He's looking for a home run, as many home runs as he can get. So he's going to be using the 50-day, and in some cases even the 200. So it's all a matter of your style, but just make sure you create rules around those moving averages you decide to use.
Yeah, I would agree on that. You can use any moving averages. I know guys who use the 17-day exponential moving average, the 22-day, the 9-day exponential, in different variations. And I think really it's sort of the same thing that I talk about when I'm talking about the 620 intraday model that I use in the crossbow that Dr. K uses. Because I've been talking about it on the chat room, and you get some guys who, it's all it is a MACD cross. Yeah, it is roughly. I mean, it's not anything fancy, but what you're doing is you're trying.
Actually, I'm not even. It's interesting that they think that. It's because my crossbow
is
not
really. So
when I'm doing a study, it morphs away from the original parameters. So I can just say for the record, MACD has nothing to do with crossbow. So if people are going around saying all that crossbow is MACD, then they're sadly mistaken.
Right, and on the 620, it's not. There's a lot of context involved, and I've gone and explained it to no end, on these webinars. But the whole point of that is simply to show how you need to develop tools, and a lot of it's just around your own way of observing the market and your own psychology, and you use these things contextually and also to give you some guidelines. There's no magic panacea that's going to solve everything for you in the markets, and I think it's all about learning what works best for you. So when you think about using a 13-day EMA or a 17-day or 22 EMA versus a 10-day or 20-day simple, it's really all about your own observations and whether you're comfortable with it, and you learn to use it to your advantage. This whole little thing I use, the 620 thing, is just something I devised to keep myself out of trouble when I'm trying to short stocks into rallies, and then I've applied it to trading the UVXY and sometimes even on the long side. For example, let me just show you what I'm doing today is I'm keeping an eye on CRE here, and you just watch this thing coming down all day. I don't count this morning, but once it broke down, stocks will pull back during the day, but a lot of times what you'll see happen is they'll turn and give you a 620 buy signal. Very simple. You can use this little MACD as a cross as a guide, I suppose, if you want to, and it works well that way. But I also look at kind of extremes in the MACD and just kind of what the market's doing. And to me, this stock pulling back, for example, in here is coming right into the 10-day moving average and right on the top of the space. So I look at this as either a place to add to my position or if I'm not in the stock, to test out coming into a position if we get a turn in here. And it may even be that you notice that the MACD has gone from extreme low here, and as it's moved lower, it's less extreme. Now it's starting to turn back to the upside. Generally, for those of you who follow MACD, and there are books out on it, that may tell you that you're in an area where you can nibble on the stock and your risk might be low on an intraday basis, and that's what I'll use it for there. But it's nothing that's really a panacea that's going to give you these hard and fast signals that are going to work. It's more or less a guide that you have to use contextually and in conjunction with your own style and the way that you look at the market to use it as a tool. And that's really all it is, nothing more than that. So let's see. Thoughts on biotech leadership? There's no real thoughts. You're seeing some breakdown. Amgen got smacked. That's a big volume gap down. That's usually the type of move that Dr. K would say. Whoops, I'm looking at the wrong chart here. Let's go here to Amgen got slammed on a high volume gap down. You get some volume here though. yesterday as it tries to recover. But Cree also, you saw all of these get knocked down. They're kind of starting to flop around. Gilead, Regeneron is still acting fine. But it's still extended, so it's up around its 10-day moving average. This ADAC, ACAD. What am I saying? There's my dyslexia showing up again. For some of you who were in the lounge last week, I was talking about right around the 12 area. The way you could look at this when you had a gap up here, and I don't think we ever put out an alert on this, but if I'm sitting in the chat room, I'm always happy to go, blow some steam off on some stocks that I'm watching and see what other people are looking at. I noticed some people have some pretty good ideas, and I like to go in there and just check out what's going on. But if you notice here, you have the Bible gap, and then you go 1, 2, 3, 4, 5, 6 days. Okay, Dr. K's 6-day rule would tell you at this point that if this thing doesn't get going soon, you got a problem. And the beauty here is it's actually pretty tight action. You notice on this day right here, 5 days ago on the chart, is that 5 or 6 days ago if you count today, right here, you can see that the volume picks up just a hair, and as it dips below the 12 level, you get a little bit of support there. And so I thought this thing could be bought right along the 12 area, and then boom, you get a nice 10% plus move on that right away. It's holding in tight, and that sort of thing looks pretty decent. So that one's been acting pretty well. Let's check out some of the other stocks on the biotech realm. Let's see, what are there, Dr. K? Some of the biggies. Oh, Biogen, of course. They came out with earnings, got hacked, and have come back up. These little V-shaped things. These things have had a nice run, so they may be ready to rotate out of favor, and I would be a little leery if I own them. And my view is, if you got 20% profit or more in something, you might look at taking that and banking that, and then see if you rotate into something else in the market, or if you have something you can.
Yeah, you got like ALKS. That's interesting. Yeah. ALKS, DCRX, VRX. They've been holding up very well.
Yeah, this one also, comes in, has a pocket pivot type move here, and then pulls back in. Maybe it's viable in there, but some of these are holding, and maybe they need to base for a while, so maybe they're not going to be the hot leaders. And Dr. K, could you say though that since these biotechs were acting so well, and now they've all been clocked, that this is an issue for the market overall?
Well, it is a negative, certainly, when you see a leading group get hit hard. And the question is, sometimes it takes more than one whack to topple a group. And we also have the QE effect. So as QE pushes the markets higher, I think that this group, being still quite a strong group, will also probably continue higher as well.
Right.
That's just my guess, just based on market action. I mean, the group still is ranked 6. So yeah, I would say the odds favor this group continuing to do well, assuming that's a big if. Of course, that the general markets do continue higher, and so far this year that's been the case because of the quantitative easing effect.
Somebody asks, I'm going to run through questions real quick. Would SPLK undercutting yesterday's low negate the pocket pivot? I would not want to see it undercut that low, so that's all I would have to say there. Depending on what your stop is, you might give it more room. I think someone's asking about the 620 thing, but I already kind of showed, what that's all about. LinkedIn going into earnings, I'm going to guess that they're going to move higher on earnings. I think they're probably doing very well right now. The stock is in a second stage base here, so it's been holding above the 10-week moving average. I don't see a problem with having a 10% position going into earnings. Not a lot of risk there, and I think the stock has potential. So let's see. Somebody asked a question. 2013 first quarter, 14 institutions bought $172 million worth of Celgene. I'd like to know how many shares that is. With it being up 50% from the breakout point in January, would the past 2 days of volume into earnings be a large yellow flag that this is done, or still intact for one of O'Neill's big stock movers still ahead? I don't think Celgene is really a big stock mover. I think it's a big cap biotech that has gained favor, and you've seen money flow into it. If it's up 50% since January, it's probably in a position where it needs to base for a while. It doesn't necessarily mean it's going to break down. I think in most of these stocks, you're using as an ultimate selling guide the 50-day or 10-week moving averages. FLT is one everybody always asks about. You got a nice move off the 50-day moving average. Was not, I don't believe, was it enough? It was 1 day short of being a pocket pivot type bounce off the 50-day, but that's the first time it's tested this. You know, it has actually tested it once before on the 10-week, and you're trying to hold along, and it's kind of hanging in there, so it's, you know, looking okay. Doesn't look bad. SPGI is probably forming a flag formation after this sharp run-up. This isn't climactic, I don't think, because this is the breakout from the base on the weekly chart, and you've run up. So it's not a climax top, but it does tell you the stock probably needs to go sideways here. But I don't. If you own it from lower on in the pattern, and you're up on it nicely, I don't see any reason to sell it. DPZ, Domino's Pizza. I got a good story for you guys. Yesterday I was hanging out with a friend at my daughter's softball game. My daughter's school was playing his daughter's school, so West Side neighborhood is the school my kids go to here in Playa del Rey, and his daughter goes to St. Matthew's in Pacific Palisades, and you may know St. Matthew's is the famous private school where Tom Hanks did that little routine, putting on the afro wig and pretending he was black, and you know, that's what I love about liberals, is that I think deep down inside they're really all racist, because they think all us poor little people of color are you know, are really just something to make fun of. But you know, that's just my opinion. But in any case. He had to go back and leave the game early to go to he coaches a soccer team, a bunch of girls, 17 girls on his soccer team, and he ordered a bunch of Domino's pizzas, and they didn't get there, and so he had 17 8, 9-year-old girls ticked off at him, and I think that's not something you really want happening. So you know, we're kind of down on Domino's right now, V-shaped move, and it is just pizza and junk food. But it doesn't seem like it's going down, so it acts okay. Not really my favorite stock, but it's doing okay. The other one is Papa John's. If anybody is familiar with pizza, and you notice here they're basing in a nice tight flat base. Look at how this one's going tight sideways. So the pizza group is strong, and I think pizza may be, you know, an investment for the new millennium here. I do notice that a lot of pizza parlors are offering gluten-free pizzas these days, so I'm happy about that. Somebody says, how do you keep winning trades from turning into losers? Sell them when you have a profit. You know, a lot of times, like I've been saying, in this market, if you have a 10, 20% profit in a stock, take it, just take it, and then let it set up again. And that's been one way I've been able to protect myself in the old PA. But you know, it's not all that simple. So. But that's basically how there's a, you know, either that or find a very reliable crystal ball. Lionsgate Financial broke out of a 3 weeks tight pattern here on a pocket pivot move. It had a pocket pivot here. We talked about that. So you had an early start. The media content stocks have been pretty strong, and LGF is one of them. And it's just pulling back on lighter volume today, it looks like to me, right, Dr. K? Am I correct on that?
No, that's right.
Yeah, 28% below average, so it's acting okay. I'm watching the CRE, you know, we were messing with that earlier, and just I like to do this in real time. You can see it's kind of turning, so to me, it's telling me, you know, just kind of looking at this contextually, looking at the daily chart and the pullback and where that is, and right now I think we're running 12% below average volume. You know, that to me that looks like a pullback you can buy into, and I'll use that as a guide, and I will buy the stock. And doesn't it makes, for me, that's just one way to handle it, and I kind of like it, you know. So it looks like it's turning. If you get all these crosses, I guess you can come into it, and I think your risk is relatively low doing that. So AMBA, I was about to mention that stock, is Ambarella. I think is interesting. It's a little semiconductor, but it's a little semiconductor, okay? And it trades 409,000 shares a day. You can always see, what I like about eSignal is on the moving average line, they actually label how much volume that is currently. So it's a quick reference there. And you have a little pocket pivot type move, but it's coming after a downtrend. You're a little bit sideways here. Would you call that a pocket pivot, Dr. K? Forget about, you know, being a cheap stock and maybe you don't like the group so much, but would you call that a pocket pivot on its face?
Yeah, sure.
Okay, so you have a little pocket pivot there. So if you love the stock, there it is. 50-day becomes your guide for sell if it breaks that. Somebody says I'm up nice on BC. Oh, so you're bragging? Is that it? You're not going to ask me my thoughts on it? So it looks good. I mean, acting well. Verizon. I use Verizon. I think they're the best network out there. Never had a problem with them. at all, wherever I am. And I've been out in some remote places. I mean, somebody even warned me last year. We went out to Rhode Island, and they said, watch out if you're down in Newport, Rhode Island, which I think is a great town, actually, for any of you who live around there, that the internet service may not be so hot, but it was fine. So Verizon rocks. Somebody says we sound fabulous. We need Billy Crystal here. You sound marvelous. Let's see. Dr. K, have you studied the trend in the accumulation distribution to predict future price performance? I've been watching AD decline before price declines on a few stocks I've been watching.
Yeah, I mean it's a good secondary indicator. You know, if you utilize it, there's nothing wrong with that. It certainly can help complete a picture, and you know, that's why, you know, on all these charts there's always the line and then the rating as well, and it helps round out the overall picture.
Somebody asked, is it okay to smoke cigars in the lounge? You can smoke whatever you want because none of us can smell it. You know, if you want to smoke medical marijuana, go for it. As long as it does not affect the quality of the discussion, you become incoherent. Let's see. Someone says SPGI has been talked about as being a high tide flag, but it looks to me like it needs more to it. You know, a high tide flag. If you read it in IBD, you know, don't pay attention to what they're reporters. So, you know, most of the reporters there are just reporters, and what happens is they get trained, and when they get too good, they get fired or they leave. And so I wouldn't pay attention to that. Is it a high tide flag? No, not yet. It's a sharp uptrend. As I said, we don't think it's a climax top, but it does tell you stock needs to base for a while. So it needs more time. Yeah, that's what I would say. And you know, it's really not coherent yet. You know, you close here last week, you're up here this week. We'll see where we close today, but you know, net, it's not really there yet. Gil, going forward, could you darken the 10-day moving average line? Okay, let's do that right now. Let's see, edit studies, 10-day moving average, and how about this? So make it that. I think the color's okay though. Let's see if that works. How's that? Is that good enough for you? Can you see the 10-day line there? Looking good? Good, okay. Glad to hear it. Let's see. Cruising through a few more questions here. Please explain the crossbow. Dr. K doesn't want to explain it. That one's very proprietary right now. Top secret. So
yeah, but we all know it's a short-term trading device that helps. You could use it just to day trade. Although I'm not a day trader by nature, and I found that it just puts more stress than necessary, because if you go against the grain of who you are, you'll feel that stress. And you know, the thing was the returns, the risk on the model I created is very, very low, incredibly low, the lowest I've ever created any model, and then it proved out in real time as well. But that said, because of the nature of the model, you know, if you miss a signal, you could be away from your computer for 60 seconds, and that might be enough to miss a signal. And then you see this trade go in your favor for the next 3 hours that you missed. It creates a lot of stress. So yeah, I've basically you know, it is what it is. I have a longer term model that I'm integrating in with the UVXY volatility model that I think is going to, you know, this also has been tested. It's just as thoroughly as the crossbow model, and I think, well, it's much more in keeping with my style, because it allows one to sit on a position for not just hours, but typically days, if not weeks.
Hey, Dr. K, can you talk about gold real quick? I got to answer the door here. I'll be right back in a second.
Well, we all know that gold broke its uptrend for the first time in 12 years since its uptrend started in 2001, and broke it on huge volume. Gold is manipulated by a number of entities, including the Federal Reserve and China, who has a huge force. When they want to use it, they can certainly push down or prop up the price of gold, and so can the Fed. So we see these different cross currents going on, and right now we're seeing that gold is having a bounce of sorts after selling off. You know, one could argue certainly oversold, maybe as a combination of short sellers We've written some articles on this as to why gold came apart so hard. But right now we're seeing a bounce, a weaker one on silver, and the question is, well, is this going to be the final low of gold before it actually starts heading higher and then completes this long base and breaks out? You have the QE effect, which is the strongest argument for higher gold, but then you have just the sheer manipulative cross currents that also go on as concerns gold. With the Fed props the dollar up. They don't want to see gold at a high price. They like to see the stronger dollar, and that essentially will weaken gold. And so I really, when it comes to, if you look at a weekly chart on gold, and you go back however many years you want, you'll see that gold is quite unpredictable when it's in the middle of a basing pattern like it is now. So I'm not going to say it couldn't go lower or that's the final low. Who knows? Too many cross currents to make any sort of prediction. But what I love about gold is that when the base completes, and it's quite obvious to any technical analyst that when the base completes, it's ready to go. And it's very clean on the breakout. It does this every single time. So, with gold and silver, it's just a matter of patience for these metals to round out their basing patterns. And from here, it looks like we're going to be waiting another 6 to 12 months.
Yeah,
potentially.
definitely.
So, it's just patience. Patience is key here.
Let's see, more questions here. Yeah, the pizza stocks will take over the new leadership from biotech and lead this market higher. Yeah, I like that. Who knows? Maybe they could. I mean, look at where some of these car rental companies, what they've done in this market. So, and of course, let's not forget good old Krispy Kreme donuts, which is holding its 50-day moving average. So donuts and pizza, everybody. We actually just wrote an article for Market Watch on McDonald's, which is basically holding the 50-day moving average. Jack in the Box, which is moving higher, I believe, is acting pretty well. And Krispy Kreme donuts in compare. We could have gone on with the pizza, GPZ and PZZA, but we chose not to. So anyway, let's see. Core's improving picture is still short. Well, it hit the 200-day moving average, so I think that's pretty much it on the downside. The picture is not really that much improvement. It's still below the 10-week moving average, below the 50-day. Seems to find resistance there. I think you're kind of in the netherworld here until they come out with earnings, and then you see what happens here. So, see, I'm watching in real time. You notice here we're looking at I'm watching Netflix too. Where'd this go? Let's bring us back over here. And Netflix is sort of trying to bottom on the pullback today, actually from yesterday. And Korea is starting to make the turn here, so I've been nibbling in here because I can already get a sense that you're starting to bottom in here just based on the MACD. So, and I look at that all the time, so I have a feel for it, and I think that's again what we're talking about. If you come up with anything like that, and I noticed a few of you guys on in the lounge have talked about some of the different systems you use, using different moving averages and time periods for the MACD and whatnot, and maybe using RSI as well. And like I said, you can use anything if it works for you. Anyways, let's see, SNTS. This thing, it's a drug stock. They have one drug. It's done okay. It's done actually pretty well since the Bible gap up, and it's up 10. How much is that up? Say from here, 15, say 30 roughly to 19. What is that, Dr. K? You got
that's good.
20%.
30. Well, you're talking about from the gap up? Yeah.
From say just like 1530 level as it levels off in here. Let's say you bought it in here.
Low 20s. Not bad.
Yeah, I mean,
market.
Sell it. Vertex, good one. I've been watching this one, and it's a little porous around the pullback. I've tried to buy a little bit yesterday. It didn't really go anywhere, so I blew it off, and it's coming down a little more today. Volume is drying up. It might be a little bit porous in here and then turn higher, but keep in mind that this has negative earnings. You're not expected to make earnings, I think, for a couple of years, but I noticed like 2015, they're looking for $6.70-something with this new cerebral palsy drug. Is that what it is, Dr. K?
I believe so. Let me. I believe they had a big hit on that.
Yeah. So maybe it's a little porous. It's a biotech, so you could allow a couple of percent porosity. The low here is 80.10, so a couple of percent would be, 78 and change, I guess, 78.20 on that, maybe a little more below 78. So I'm just kind of watching this one, but it doesn't seem, if we pull this up, you can see the CRE is starting to turn pretty nicely. Netflix not turning so nicely, but
yeah, no, it's a cystic fibrosis. That was it.
Cystic fibrosis, that's right. So let's look at Vertex here, and I watch this every day on this thing, and it looks like it might be trying to turn, but it's been a little bit erratic. But the one thing I think about this one is that's a huge amount of volume in here, and if we look at the weekly chart, you're coming out of this big structure, so you might think that that's going to figure in here, but so far it really hasn't. So I think a lot of investors, maybe institutions who own the stock earlier, sold into this move possibly. Although you did have a lot buying it, but some of them may come in here and sell into this move on the premise that they're going to come through with the drug, and there are big earnings estimates going forward, and mutual funds do take a long-term view. Let's see. When is a logical place to short Apple? I don't think there is a logical place to short Apple. I think it's probably... in fact, yesterday on the chat room, I was joking that Apple's going to be the dog from down under that leads the market higher, because it looks like you're losing Amazon today. Let's see, what's Amazon up to right now? Yeah, it's still looking pretty ugly, heading right for the 200-day. So it's going to undercut these lows, hit the 200-day. Maybe it bounces there. Maybe that's the one to be shorting. But Apple, a little bit late to the party at this point, and you do break down. I think it's getting obvious. But I do think longer term the stock can go lower, but I don't think I'd be shorting it just yet. If it gets through this high, which I think is 415.25 from 3 days ago, and it's probably headed to the 50-day another time. But like Dr. Hay said, the stock is still in a downtrend. So I think if you were going to try and short it, you'd have to be anticipating a move down, or rather a move back up into the 50-day and watching it fail there first. CF, is this a good short setup? It didn't quite get to the 50-day. I don't know. I'm not really that interested in trying to short stocks here. I don't know if you're going to be that successful. I think it's probably more dangerous than not. And especially, I know some people were asking me about ACAM going into earnings. Can you short this rally up into the 50-day moving average? And you can see what happens here. Boom. But I think the stock had already broken down. Let's just look at a longer view. Here's a little head and shoulders type thing, but shorting these things into earnings in this type of market doesn't seem to be the smart thing to do. So if you look at CF, it looks pretty ugly on the weekly chart. So you could say there's a left shoulder ahead, and now you're looking for a right shoulder. So I might, watch it coming up in here. Have they announced earnings yet, Dr. K? Do you know?
Let me just check here.
No, May 2nd after market. So
yeah,
I got it.
They're coming
let's keep going here. PCYC. I was looking at this, and I thought this was kind of interesting. You're underneath the 50-day moving average. You've broken down after a nice run-up, and you're holding tight in here after trying to move up through the 50-day, but reversing at the 50-day. I don't know. If you own the stock, it has violated the 50-day moving average already, so it would be a sell on that basis. And I think that you have to just kind of evaluate how it acts from here. I mean, you got the violation. Dr. K, if you own the stock for this whole run, would you sell it here?
Yeah. I mean, it's violated, so no two ways about it.
Answer. Okay. So no fudging around there. So somebody says, ultimately, is this market dead? This kind of reminds me of the monster movies of the 50s and 60s, a market that would not die, starring Uncle Ben. It is kind of like that. More like Scary Movie 4 or something like that. It's just a very bizarre, choppy environment, and I think Dr. has made the point that if you're going to make progress, you take positions in stocks, and then you have to be patient and give the market some time and give things a little bit of room. But patience really has been the key. And I know we've been shaken out of some positions that were acting well, and then they break for a couple of days. The market starts to break down. On that last pullback here, I mean, it'd be easy to get shaken out of your positions on any of these pullbacks because they start to look pretty ugly. And it becomes very difficult. But I think you have some patience, but once you get 10, 15, 20% profits, you have to be willing to take them. So somebody says, any thoughts on central bankers buying into ETFs and equities? I didn't see that story. I'm not sure what that is all about. But central bankers buying into, so what are they going to do? Instead of buying bonds, they're going to start buying ETFs and equities? I guess, that would be another propping force ultimately, but it seems kind of silly to me. What do you think, Dr. K?
Yeah, no, it's there's a lot of silly things out there.
Kind of weird.
A lot of it's
some of the Central European Bank or the European central banks are going to do it. Okay, well, I say good luck to them if they're going to do that. How close is the MDM to rolling over? What is it looking for? I mean, I threw it a bone this morning, tried to get it to roll over. It didn't want to do it, so not really happening.
No, it's really looking for more evidence of it's a combination of things, just simply because leadership and price volume can be negative, and the market find its footing again. So it's sensitive to that. So it's taking a little bit more risk because of that, but it consequently will have less chance that it'll get bottom ticked.
How's Facebook doing? Facebook moving up. I was talking about this yesterday in the chat room that I wouldn't be surprised to see Facebook gap up on earnings next week, just because it's in an ugly position. If you look at the base here, you are actually trying to get some support. You can see this week here, you get a little bit of support, and it would make sense to me if you have this deep cup that this isn't a sufficient enough handle to launch a big move from. And so what it's doing now is it's making a longer, deeper, uglier handle. And in this market, I refer to things as an ugly duckling trade, and it may be that's what Facebook is all about, because the expectations are not that great. I do think, though, what are they estimated to make this year, Dr. K? What was that? I think 57 cents higher. And then 78 cents next year.
So 8% higher, and then 37% higher.
Right, and so if you're looking out to 2014, if somebody were to say, if there was such a stock that is big social networking, in the way that you have big tech and big pharma and big biotech and whatever other big things you want to talk about in the market, big stocks in a particular group or sector, then you would have to say that Facebook is big social networking. Of course, LinkedIn comes in a nice second to that, and so I think on that basis, it's probably going to go higher. I mean, that's my thing. Their earnings look okay. You're in the bottom of a base, and I think you're kind of looking for a buy point. Maybe that's going to be some gap up on earnings that takes it up to 32. So, maybe you could try it out with a 10% position going into earnings, but it seems to me that it has that potential, and on a fundamental basis, that seems to be rationalized. And someone also points out big pizza. Domino's is big pizza, I think. Papa John's, though, is a little pizza. They're a much thinner stock. But Domino's, big pizza, and of course, Krispy Kreme and Dunkin' Donuts are big donuts. So actually, I have, there's there was a donut store I went to once. This is a long time ago, long before I gave up donuts. After spending several years at Donut Eaters Anonymous, in my early 20s, I used to have a donut for breakfast every morning, a donut and a massive cup of coffee. How's that for a diet, Dr. K?
Caffeine and all the sugar.
Yeah, now it's decaffeinated green tea with extra antioxidants, homemade yogurt, and fruit. Yeah, that's now what we eat. Anyways, somebody says we need a pizza ETF. Any more? Oh, somebody wants me to bless Tupperware. Tupperware is, we use a lot of Tupperware around here, I have to say. But stocks holding along the 10-week moving average, you're getting support this week, in a sort of shallow ascending base. I don't think, have they come out with earnings yet? Let's see. On a weekly chart, it doesn't really look too bad. It looks like it wants to go higher. They just did come out with earnings, and of course they sold off. It looks like the one day of earnings and then turn around and went higher. So looks okay to me. Doesn't look bad. So but it's a 15% grower. So to me, it's one of those stocks like Avis or whatever else is growing pretty slow, but it works. Anyways, last question, just last comment. Somebody says, took my profit on Celgene. They hate to be a pest, but they would like me to darken the 10-week line here. Okay, let's do that now. Might as well do it now, so you guys can all get a lesson on how to use eSignal. Let's see, edit studies. Where's my 10-week line? Here it is. We'll make it a little darker. There you go. I know how that one goes. For those of you who find as you get older you need reading glasses. But anyways, where were we? On Celgene, sold at 80. Wait. Took my profit. Oh, you bought it at 80 and took your profit. Yeah, I don't see anything wrong with that. I think it almost looks like, does it follow the, has it been followed? Would you use a 10-week line as your stop on this one, Dr. K?
It looks like, well, you're talking about the going to the 50-day, because it
Yeah.
looks like it's violated it within
On Celgene?
call.
Okay, it really not since breaking out.
And I wouldn't, then you use the 50-day.
You would use a 50-day yourself? Okay, it's only a few points lower, so. But, you know, I don't see anything wrong with that. Just take your profit and move along and then look for the next thing.
It's
risk low.
It's also contextual, because using the 50-day, choosing to use the 50 days also means you're going to be in it for the longer haul, and sometimes the market will do things that'll make you want to go to cash ahead of that.
Right, right. So, anyways, and that's pretty much it for the questions. You know, you're kind of seeing what's going on here. It's a little of this, a little of that, a whole lot of nothing, but you're in a position where the market could simply go sideways and then set up and go higher. It's QE, you know, that's what it is. And if Japan, which I refer to as what they've been implementing over there is kamikaze QE, it can do it after decades of living under the regime of, you know, a QE regime, so to speak, then, and that market's been shooting higher, because if you look at stocks, we wrote a Market Watch article a few weeks ago, somewhere right around in here, on Toyota Motor and Honda Motor, and our basic conclusion was that if the Japanese continue with this QE, they're going to drive these prices higher. Why can't they do that in the U.S. markets? I think they can, and I think that's something you need to be aware of. But I think the market tests your patience, as Dr. K says, and I think you got to pick your spots and then be willing to be patient. So, and on that note, you notice, you guys, I don't know if anybody was trying to buy along with me along the lows, but you can see that it is turning. So I'm going to keep an eye. Let's see, Netflix is another stock I think looks interesting. I think this might work and go higher. You can see the volume drying up, and you're still holding. I think as long as you hold the low, you're okay. So I think it has potential to go higher. So that's another one I'm keeping my eye on here on the on my little handy-dandy 5-minute chart. But you can see it's sort of stabilizing. A couple other things you notice here is here's your MACD. It's extreme low here, but as it's working its way up, the MACD is sort of improving and not really becoming negative or positive. So you might be in a zone where you could nibble on some shares and you have a low risk point, because you're only about 2% away, probably less, away from your stop down at the intraday low of the gap up day. So, you know, pretty simple. So a couple things to try. I think I also like the workday. I think this, so you got to hold it in the earnings, but I think it's an interesting stock. I like the weekly pattern. You have to like this big volume spike in here. It's a volatile ride, so position size accordingly, but I think it looks okay, and I think you basically have to take things as they come on this one. But I don't think you want to be too big, because you can see it's pretty volatile. Anyways, that's all we've got. NAS volume up over today. Real quickly, somebody's pointing that out. Is that correct? NAS volume is down 13% right now. NYSE volume is down over 15% intraday compared to yesterday. So it's a light volume pullback, and that's the bottom line today. So I don't think that you can assume that we're rolling over. So, you know, but it is tough, because I think you want to be looking at stocks that are acting strong and then have little pullbacks, and maybe you try to nibble in there and keep your positions manageable, so that if things do break down, you're not exposed too much. But on the other hand, you're able to participate in some upside. But you know, it looks okay to me. So far, yeah, look okay to you, Dr. K?
Yep, so far so good.
Yeah. So, you know, can't really say it's ready to roll over yet. Anyways, that's all we've got, you guys. Thanks again. You'll catch me in the lounge frequently. I pop in a lot. And may hang out there for a little while.
Yeah, actually, the next time you go in, give me, let me know, and then we can go in together and poke around.
Okay, yeah. So, and we'll get some virtual martinis and some cigars, and we'll be good to go. So sounds good. All right, you guys, thanks for showing up as always. We appreciate it, and we'll catch you next time. So good luck today, and I think you guys have a pretty good idea what's going on and what you can do here. All right, take care. We'll catch you next
So long,
time.
everyone.